Understanding savings accounts, a comprehensive guide. A savings account is a fundamental financial tool offered by banks and credit unions designed for keeping your money safe while earning a modest interest. This account type is ideal for individuals looking to set aside funds for future expenses, such as emergencies, vacations, or down payments for large purchases like a car or home. What is a savings account? At its core, a savings account allows you to deposit money, earn interest, and have access to your funds. The interest rates associated with savings accounts are typically modest compared to other investment vehicles. However, they provide the safety and liquidity that many investors require for short-term savings. Savings accounts are an integral part of personal finance, assisting individuals in cultivating an emergency fund or achieving specific short-term financial goals. While the deposits are generally insured up to $250,000 by the Federal Deposit Insurance Corporation, FDIC, or National Credit Union Administration, NCUA, the interest earned is considered taxable income. How do savings accounts work? Savings accounts serve as secure deposits for your funds while allowing you to earn interest. Banks use the deposits from savings accounts to fund lending activities, which is why they are available at virtually every financial institution, including traditional banks, credit unions, and even online banks. Interest rates can differ from one institution to another, and they may fluctuate based on economic factors such as changes in the federal funds rate. High-yield savings accounts often offer significantly higher rates but may have higher minimum deposit requirements. Rules governing savings accounts. When opening a savings account, it is essential to understand the associated rules and fees. Minimum balance requirements. Some accounts may require maintaining a minimum balance to avoid monthly fees or to earn the highest advertised interest rate. Withdrawal limits. Federal regulations may limit withdrawals to 6 per month. Exceeding this limit could result in fees or account conversion to a checking account. Interest rates. It's vital to remember that while your funds earn interest, any interest earned will be taxed as income. Advantages and disadvantages of savings accounts. Pros. Ease of use. Savings accounts are straightforward to manage, particularly if you open them with the same institution as your checking account. Liquidity. Funds are easily accessible for emergencies or short-term needs without the lengthy withdrawal processes associated with other savings instruments like CDs or bonds. Safety. Up to $250,000 is insured by the FDIC or NCUA per depositor, providing peace of mind in case of bank failure. Cons. Low returns. The trade-off for safety is lower interest rates compared to other investment options like stocks, bonds, or certificates of deposit, CDs. Temptation to withdraw. The ease of access may lead to impulsive spending rather than saving. Possible minimum balance requirements. Some accounts may impose fees if your balance falls below a specified amount. Maximizing earnings from savings accounts. To enhance the returns on your savings account, consider these strategies. 1. Shop around. Compare rates from various banks and credit unions, especially online banks, which often provide higher interest rates due to lower operational costs. 2. Beware of fees. Ensure the account you are considering doesn't have fees that could erode your earnings. 3. Consider high-yield accounts. Look for high-yield savings accounts, despite the higher minimum balance requirements, as they can significantly boost your interest earnings. Opening a savings account. To establish a savings account, follow these steps. 1. Choose your institution. Research different banks or credit unions to find the best rates and terms. 2. Gather documents. You will typically need your personal identification, e.g., government-issued ID, social security number, and contact information. 3. Make an initial deposit. Some institutions require an initial deposit to open the account, which can often be made through a transfer or in-person deposit. Strategies for saving. The amount you maintain in your savings account largely depends on your financial goals. Emergency fund. Ideally, aim for 3 to 6 months' worth of living expenses to cushion against unexpected financial setbacks. Targeted savings goals: build your balance gradually to achieve specific objectives, like vacations or large purchases. Savings accounts for children and students. Many banks offer specialized savings accounts for minors or students. Generally, a parent or guardian must co-sign to open a savings account for a child. These accounts may feature lower fees to entice young savers, although they typically offer lower interest rates. Frequently asked questions, FAQs. How can I open a savings account? To open a savings account, visit a bank branch or their official website with your identification and funds to deposit. Some banks might require an accompanying checking account. What savings accounts earn the highest interest? Interest rates can vary, so compare rates from different financial institutions. As of June 2024, the best savings account rates can range between 4.5% to 5.5%. How do I close a savings account? Most banks provide several methods to close an account, including visiting a branch, submitting a written request, or doing so over the phone. The bottom line: savings accounts provide a fundamental method to earn interest on your funds while ensuring easy access and safety. While they generally offer lower rates compared to other investment options, their simplicity and security make them an invaluable element of financial planning. Always consider consulting a financial advisor to tailor your saving strategy to meet your specific financial goals effectively.